Welcome to Stock Pro Gist. In today's news, oil prices remain stable following OPEC Plus decision. Oil prices saw minimal movement on Monday after the Organization of the Petroleum Exporting Countries and its allies, OPEC Plus, announced an extension of production cuts. The West Texas Intermediate (WTI) contract for April saw a slight decline of 0.24%, settling at $79.78 per barrel. In contrast, May Brent futures experienced a modest increase of 0.06%, reaching $83.60 per barrel. This decision to continue production cuts by 2.2 million barrels per day through the second quarter was largely anticipated by the market and did not trigger significant price swings. Analysts at Bank of America forecast continued upward trends for oil prices in the near future, with higher highs and higher lows. However, they project Brent crude to remain within a range of $73 to $96 per barrel.
Today on Stock Pro Gist, Nasdaq 100 rides a wave of upward momentum. Please subscribe if you are just watching. The Nasdaq 100, a key index for major non-financial companies, is on a remarkable streak. It has gone over 300 days without a significant decline of at least 2.5%, marking the third longest such stretch since 1990. This sustained rise has some analysts, like BTIG's chief market technician Jonathan Krinsky, cautious. While not necessarily a sign of an impending downturn, Krinsky believes it suggests potential short-term complacency. However, Krinsky highlights the presence of opportunities beyond the high-flying stocks currently dominating the market. He emphasizes that there are valuable prospects outside the most popular names. The Nasdaq 100's impressive run this year is further emphasized by its nearly 9% year-to-date gain, reflecting the positive sentiment in the market.
Stock market takes a pause after record highs. The stock market cooled down on Monday after a strong run that pushed major indexes to record levels. The Dow Jones fell slightly, down 0.2% or 72 points. The S&P 500 and Nasdaq Composite also saw small declines of 0.1% and 0.2% respectively. Apple was the biggest loser, dropping over 2% after the European Union fined them nearly $2 billion for anti-competitive practices in the music streaming market. Meanwhile, a few other companies saw gains. Lyft jumped almost 6% after an analyst upgrade. Super Microcomputer and Deckers Outdoor surged after being added to the S&P 500 index. The airline merger between JetBlue and Spirit Airlines fell apart after losing an antitrust lawsuit, causing JetBlue's stock to rise slightly while Spirit's plummeted over 12%. Overall, the market is taking a breather after recent strong gains, particularly in technology stocks.
Pre-market movers: Supermicro, Macy's, Soar, Apple dips. Here's a quick rundown of some of the stocks making notable moves in pre-market trading today, March 4th, 2024. Super Microcomputer, SMCI, and Deckers Outdoor, DECK. Both companies are surging, up 12% and 5% respectively, after being announced as the newest additions to the prestigious S&P 500 index later this month. Macy's M. Shares are spiking nearly 17% following news that Arkhouse Management increased its offer to acquire the department store chain to $24 per share, valuing the deal at roughly $6.6 billion. Apple, AAPL. The tech giant is experiencing a slight decline, about 1% after being hit with a $1.95 billion fine from the European Commission related to anti-competitive practices in the music streaming market.
Ford stock gains on strong February sales performance. Ford shares surged over 4% on Monday after the automaker reported positive February sales figures, driven by a significant increase in demand for hybrid and electric vehicles. The Detroit-based carmaker announced it sold over 174,000 cars and trucks last month, reflecting a 10.5% year-over-year growth. This positive performance was fueled by impressive jumps in sales of both electric vehicles, up 81%, and hybrid models, up 32%. This momentum has pushed Ford's stock price up over 6% year-to-date, indicating investor confidence in the company's future. Stock market rally can broaden, Oppenheimer strategist says. A mixed performance among the different sectors comprising the S&P 500 can signal the market has more room to run, said John Stoltzfus, Oppenheimer's chief investing strategist. The benchmark index has continued grinding to new all-time highs in recent weeks.
But Stoltzfus said variance within the different industries proves the rally may have more steam if laggards can join the strong performers. There's likely room for a further broadening of this year's stock market rally and opportunity to see equities further climb the proverbial wall of worry, he told clients. Information technology has led the index higher this year via a gain of more than 12%. On the other hand, utilities and real estate have dropped more than 3% and 1%, respectively, over the same period. That's all I have for you today. Don't fail to subscribe so you don't miss out of our future news. Thank you for watching.